Welcome to Markets Now. I'm Michelle Rourke along with Tomm Pfitzenmaier with Summit Commodity Brokerage. And we've been seeing some mixed trade over in the livestock futures with hogs mostly lower, cattle mostly higher. And we're mostly lower in the grains right now with the exception of a few of the wheat contracts. We've had a pretty good break today, Tom, in the soybean market. Took out that $15 mark. Are funds going to continue to liquidate here? What do you think?
Well, they've had a huge position in both soybeans and meal. We were in that nice uptrending channel in both of them for quite some time through most of the winter really, and breaking out through the bottom of that is going to be a problem because they've got like I said, a huge long position that somehow they're going to have to try to liquidate, and who's going to be standing around waiting to buy it? That's kind of a problem. Our export sales on soybeans are going to diminish. We're starting to already see them diminish. They're probably going to go to not very much for the next 6 months here with all these Brazilian beans becoming available. So that's crush is okay, but most of the demand for our soybeans from now on, through most of this will be domestic. So I guess you're going to have to figure out with lower cattle numbers and reduced livestock in general, is feed usage going to hold up? I don't know. You hear all kinds of estimates about acreage. The USDA is saying it's going to be unchanged from next year for the next year. Some privates are saying it's going to be up a little bit. If you have an El Nino, we're probably going to have decent yields. So I don't know. I think if you get new crop beans up in that $13.60 to $14 range, you got to make some sales. As far as corn goes, same thing. If you catch a rally back up in that $5.85 to $6 range, corn's really got a problem.
Right.
We're not selling it like we thought we were going to. The Brazilians are going to have what looks like it's going to shape up to be a big safrinha crop that we're going to have to compete against. You've got cheap wheat. You've got Ukraine and Russian milling wheat that's offered cheaper than the U.S. wheat. So I don't know. Corn's going to struggle. I would guess I wouldn't be surprised to see at the end of the year, December corn back down around $5. So there's definitely some risk here for farmers that haven't gotten anything sold.
Well, even on old crop right now, we've taken out the 650 mark. We're below that level. And so, where's the next stopping point support-wise, or where do we find some value here from these end users?
I guess it's been my assumption that we were going to find pretty good support at 634 on that March contract, and we got 633 3/4 I think this morning. So we're kind of right there. Momentum indicators are down, super oversold. We've had a big liquidation. I guess I'm expecting a 10 to 15, 20 cent recovery here. And that's the area you need to look at to start making sales again, which is roughly 650 on old crop corn, March, probably May now, since March is kind of running out of gas. But like I said, December corn up in that 685 range.
Wheat
585. I can't get 6 out of my head. Sorry.
I know, I gotcha. So, Tom, wheat kind of started the tumble first, and we scored new contract lows in Chicago wheat yesterday. And we've taken out pretty much all the war and weather premium now. So do you think we're at a level, though, that we're going to see a little bit of a bounce here? Are we going to hold, or is this, pull off of the lows just a little end of month stuff?
Well, wheat's much like corn is. It's wildly oversold.
Right.
And you slipped under $7 this morning, which is certainly not now helpful, but it also should help keep the demand up for wheat. There's a lot of wheat in the world. Russian and Ukrainian wheat's cheaper than ours, so we're having trouble selling it. But I think there's probably going to be pretty good support here, sub $7 for some kind of a bounce. I don't think it's going to amount to a lot, but I think you could see some bounce just simply because it's so oversold.
Yeah, absolutely. Well, hopefully we can try to bottom a little bit here. Cattle market, of course, we faded the cattle on feed report yesterday in the live cattle futures, but we're back up into contract high areas in both live cattle and feeder cattle futures. And boy, the pullback in corn has certainly helped push this issue too, hasn't it?
Yeah, those feeders have a pretty good story. I mean, if you get cheaper corn, numbers obviously are quite supportive and are going to be supportive for I don't know, maybe a year or two. I mean, we haven't even started the withholding of heifers. Wait till that happens, and then the numbers really get interesting. The concern, of course, is the demand going to hold up? Is the economy going to soften, or is the demand for beef at these higher prices? It's, I mean, it's a premium product, and people like to eat beef, but you know, is the demand going to hold up? Especially you're competing against high price gas and all the other foodstuffs that you're trying to buy.
Right.
That's the concern. Otherwise, if it wasn't for that, I think you could be quite friendly to the beef market, or
Although,
friendlier, I guess.
yeah, the cash trade has been really leading this thing. We were up last week. Do you think we can be up again here this week? I know we have a lot of formula totals coming at the market.
Yeah, I think we're going to be firmer to a little better again this week. The next year or two is going to be quite good for the cow calf guy. I think that. I mean, that's where the buildup's got to come from. So you're going to have to reward those guys to get them to expand those herds.
Thanks for joining us as Tomm Pfitzenmaier with Summit Commodity Brokerage, and that's Markets Now.